Welcome to the Timesaver Calc for Tax walkthrough part 3, calculating period 2. In our last video I showed you how to calculate pay period 1. If you missed that video, click the link on the screen to go back and watch it. We are now going to do a cumulative tax calculation, which means the system will divide your tax-free personal allowance by the number of pay periods in the tax year, taking into consideration how much you've already used. The tax code 1150L gives you a tax-free personal allowance of £11,500 for the year, spread over 12 months for monthly pay periods or 52 weekly pay periods. This is commonly known as free pay, the amount of pay you earn a year before being taxed. As pay will normally vary over the year, this can sometimes generate a negative tax figure in a pay period other than pay period 1. Say for instance an employee earns £965 in month 1. This is just over the free pay of £11,500 divided by 12 months, so they pay £1 tax. Then in month 2 earn £950, this being under the free pay division for this month, and taking into account the free pay in month 1, they get the £1 back. If we change basis to M1 by just clicking the box, the system will not do a cumulative tax calculation, treating period 2 as if it was period 1. We see there was no tax refunded. I don't want to complicate this video with different tax codes that depend on if an employee was a starter in another pay period. So instead, we will carry on from period 1's example in the previous video. This employee started in pay period 1, and the calculation is cumulative, so basis is left blank. We will cover different tax codes and the use of basis in a later video. There are two ways to calculate pay period 2. You can either recall a previously stored payslip, if you have one stored on the system, or enter the brought forward values manually, along with the employee's payments and deductions as normal. Storing payslips on the system does save time, as you can just recall a previous payslip and click the next button. But let's do it manually for everyone that uses the software for checking calculations. We can see from the employee's previous payslip what they amounted in pay period 1. We will enter this information into the BF brought forward column on the right. Now let's make sure that this period's values and options are set up correctly. Weekly pay period 2. Tax, NI and everything else is left as it is for this example. For the payment, we know basic pay is £692.31, but let's change the payment description to something more meaningful. The employee didn't do any overtime this week, but instead let's give them a bonus of £25. The employee is still paying back a loan of £10 a week. We can now click the Calculate button. That's about it for this walkthrough. You can now store and print the payslip if you like. It will be the same process for the following weeks or months, depending on the pay frequency. In the next video, we will look at calculating directors' national insurance.